Oh, hey, are you someone who is trying to invest in the stock market but don't know where to begin or what to do, and you don't have a set strategy and you're constantly losing money and you're about to give up and you're going to end up like Timmy over here? Well, newsflash, I'm going to go over 2 strategies I personally use to help me actually beat the market, but I'm going to go over some stats and some hard truth facts about investing that most people here on YouTube or any other content platform, they do not cover. So if that sounds interesting, let's get started. Now, before I go over my 2 strategies that I personally use to allow me to make almost 70% this year in the stock market, let's go over some hard truths. Most investors today, they do not have a set goal, a set outcome. Why are they investing in the first place? What are you trying to do with the money or the stocks you're currently buying? Do you know what you're doing? Do you have a set plan? Are you trying to make passive income? Are you trying to create a retirement account? Are you trying to do short term to make a couple bucks here and there by trading options? Now, with that all being said, before you even open up a brokerage account, before you even put money in this account, you need to come up and strategize what type of plan, what type of goal are you trying to achieve. And the crazy thing about most investors is they have a 25% chance of beating the overall market
What's going on?
in year number 1. Every other year afterwards, that percentage decreases drastically to where year 20, 30, by the time you retire, is practically zero. It's 0.000 repeating 6, 9, or whatever it is. The chart's up over here that I'll show you the exact numbers, but your percentage of trying to beat the market is practically zero. So why is everyone trying to beat the market? Hedge funds cannot beat the market. They might beat it 1 year, 2 years, maybe 3, but it's not consistent of them beating the market every single year in and out. So why try to beat something that has been doing pretty well over the centuries? So that's going into strategy number 1. Why go against the grain of trying to outperform the market when you could go with the grain, grow with the overall market with the S&P 500? The other thing is too, with this whole strategy, you can invest in ETFs by VOO, BTI that track the overall market, and guess what? You'll average a 8 to 12% return every single year, because that's what historically data has shown. Again, in the past can't really fully predict what's going to happen in the future, but statistically stating, it has grown anywhere from 8 to 12% on average year over year. There will be some years where it's down. There'll be some years where it skyrockets and we're in a crazy bull market, or sometimes it's flat, but overall averaging out to 8 to 12%. So strategy number 1 is going to be, don't go against the grain, go with the grain and invest in the actual market itself. So this next strategy is one of my favorites actually, and not many people actually talk about it. And that is finding household items around your house that you use on a daily basis and invest in those given products. What does everyone have in their pockets? A phone, right? Apple, Google, Samsung, all these different brands. You could actually buy shares of this company and you'll be a little tiny fraction owner of that company. What I want you to do, pause this video, walk around your whole entire house, find items or products that you use on a daily basis and look them up on your Google McDougal and see who actually owns that product that you use. Good example, Xbox, right? I mean, I'm an Xbox player, or you could be a PS5 player, but who owns Xbox? Microsoft. Guess what? They're a publicly traded company that has done amazing since they IPO'd way back when. You can look up your computer. So I have a Dell computer in front of me. Guess what? Dell is a publicly traded stock. What are you wearing, right? Your shirts, Adidas, Nikes. Where do you go shopping? Dick's Sporting Goods. Dick's Sporting Goods in the past 3 to 5 years is actually up 300 to 500% in the past 3 to 5 years. Insane. Because what are they selling? Nike, Under Armour, bunch of sporting goods, and they're doing amazing. If you like makeup, for those ladies who watch this video, guess what? You get invest into Ulta, e.l.f., makeup products. You can invest in plants, Miracle-Gro, buy some dirt and soil, but you can invest in that company. You can invest and buy anything and everything in the stock market, but buy the things that you use on a daily basis, because you personally use those products and you like them because you use them on an everyday basis, right? If you look on the computer, what do most people use on social media? A lot of people go to Facebook, Instagram, invest in Meta. I personally own Meta, and it's done amazing for me. And I'm gonna show you my overall portfolio in 3, 2, 1. All right, so I'm in my overall account here in Robinhood. As you can see, overall, I'm up 38%. Was 40, but it did drop a little bit today. Today I'm down $71. Past year to date, I'm up 31%. Past year, I'm up 68.82%. And if I go to SPY, which tracks the overall top 500 companies, if you look at the past year, it's up 38%. And here I am hitting 70%, right? Year to date, they're up only 23, I'm up 70%. Not to brag or nothing, but again, me sticking to my 2 strategies. Now, granted, yes, I'm beating the market right now, but if I look at my overall, I was down bad in 2022 in December. I was down $4,500 because I strayed away from my strategy and I decided to invest all my money into one given company. And that's why diversification is key. Don't put all your eggs in one basket because this is what could possibly happen. Drop in almost 26% of your overall portfolio, which is not good. A quarter of my portfolio was gone at that time. Now, going to my strategy, I invest in companies that I personally use. Meta is Facebook, Instagram. I personally use that, so I bought some. JP Morgan, I have their credit card, so guess what? I like their company. They're a really well-known bank. I have some JP Morgan. The phone I'm using is Apple. I have some Apple stock. Shopify, I have my own Shopify account. I like how they run their business, and I own some of them. JEPI is a covered call ETF. They do covered calls on well-known companies like Apple, JP Morgan, and Meta. AG&C, Realty Income, which is the O, Stag, are some real estate. So I wanted to get real estate in my portfolio just because I kind of cannot personally own a house at this moment because they are expensive. So this is a way how I get into real estate, and plus they also pay a really nice dividend. Home Depot, I work there, used to work there, great company, and again, they're not going to go out of business because everyone's going to be having to do home improvements and maintenance on their homes. So Home Depot, really good company to buy because it's a longevity. Honest Company is your everyday products that are on the healthier side without the bad products or bad ingredients that like Procter & Gamble and all these other things have. And if I scroll down, I also have SoFi, AT&T. I don't have AT&T, but the price value was good. Coca-Cola, everyone knows Coca-Cola. And SCHD and SPHD, those are my 2 that I'm going to be investing in weekly, which is the overall, tracks the overall market. And on top of that, they pay a really nice dividend. If I go here to Schwab US Dividend Equity, if I scroll down, it tells me what sector they're in or investing in, tells me their top 10 companies, and you can see Home Depot is one of them that I personally own. And then you have BlackRock, Chevron, Pfizer, Verizon, UPS. And if I scroll back up, back down, expense ratio is 0.06, so I'm barely paying anything for it. And the nice thing about this is its dividend yield. The yield is, I think, 3.61, which is really nice. The overall market for SPY is, I think, 1.6. So I'm doubling, tripling my dividend yield on owning that. And what I have set up is a reoccurring investment. Every single week, I'm buying $20 of SCHD. So that way it continues to grow and build up in my portfolio. As you can see in my portfolio, I am doing both strategies. I'm buying ETFs that track the overall market, but double dipping because they pay a really good high dividend yield. And I'm buying shares of stocks that I personally use or that I personally know of. So again, if you invest in these companies that you use on a daily basis, guess what? They're more or less likely gonna stick around and do really, really well. So That is one of the main reasons why I love these two different types of strategies. Invest in the companies that you personally use and know, and invest in the market. Why try to outperform the market by buying all these little penny stocks or trying to trade these stocks and hoping you're gonna 10x, 100x your money in a day or two? It's not worth it, because that's how you lose money in the market, and you wonder why you're gonna be like Jimmy, who would I say? Jimmy Neutron, whatever I said his name was in the beginning, working until you're just bones, sitting at a computer, working your butt off, and wondering why you don't have money to retire. So these are the best two strategies to use. And like I said, if you try to outperform the market, you're going to lose. You're going to lose money. You're going to get upset. You're going to get stressed to why you're not making money in the market. Just do these two strategies. And you see how simple it is? You literally just buy companies you know, and you buy ETFs that actually hold these companies as a whole basket that pay you a pretty decent dividend. And guess what? You get to have money for retirement. You get to have money coming in as passive income, because most of these companies do pay dividends. It is not that hard to invest. You just got to have a strategy. You got to have a goal, and you got to commit. You got to stick with it. If you stray away from it, as I showed you, when you stray away from your strategy, you will lose money. I personally lost money because I strayed away from my strategy, and I lost almost a quarter. I lost practically a quarter of my portfolio 2 years ago because I strayed away from my strategy. So, hard truth is about investing, it is simple, but a lot of people, a lot of investors, they want to aim and shoot big. When they aim and shoot big, they get too eager and end up actually losing money instead of making money. Hope this video is helpful. Hopefully these two strategies you can use and implement starting today. If you guys want, I have links down below to open up a Robinhood account or a Webull account. If you use those links down below, you can actually start off and getting some free shares. And that also helps the channel out, just because also if you sign up with those links, I also personally get some free shares. Help me grow my account. You could grow your account with some free shares. See you guys in my next video. And if you guys really like this, please make sure you hit the subscribe and hit that like and comment what your thoughts are on this investing strategy. I'd like to know you guys' opinion. I'll see you guys in my next video. Peace.